Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies and their PLTR share price, and we're also going to talk about SoFi Technologies and their SOFI share price. In this video, we're going to be talking about in detail their current price targets, growth predictions, as well as their latest news updates. For instance, Palantir has recently extended their collaboration with the CDC by integrating themselves into a $400 million contract, which is absolutely amazing. And then we're going to move on and talk about how Palantir has recently extended their overall partnership with Tampa General Hospital, which again is going to be great for Palantir because this way Palantir gets to use their overall data analytics platform to improve Tampa General Hospital's patient care. And then after that, we're going to talk about how a very bullish analyst on SoFi Technologies believes the share price could surge by around 29%, which I currently have a problem with. I think that is too bullish and it's giving people some false hope. But then on the other hand, we have bearish investors saying that right now is not a good time to buy SoFi Technologies and that it's just not a good stock in general. And I also have a problem with that line of thinking. So if you want more videos on Palantir Technologies as well as SoFi Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Right now, the PLTR share price is trading at around $7 per share, while professionals believe the company should be trading anywhere between the range of $5 on the low end and $15 on the high end. Palantir Technologies, ticker symbol PLTR, is a big data and analytics company that serves both commercial enterprises as well as government clients. And recently, Palantir announced that the CDC, also known as the Centers for Disease Control and Prevention, has renewed its work with Palantir to continue delivering cutting-edge insights in terms of data analytics, so it can help modernize the nation's public health infrastructure. This is a 5-year contract worth $443 million, and it's going to allow Palantir to streamline various programs within the CDC into one singular efficient vehicle. By the CDC employing Palantir and extending their overall collaboration with the company, Palantir is going to be able to help the CDC make advancements in their overall surveillance of various disease outbreaks as well as their efficiency in the response to these outbreaks. It's also going to help in their overall supply chain resiliency, and it's going to facilitate and orchestrate proper medical countermeasures for public health emergencies. The reason this partnership is so crucial to the health of the overall nation is because this partnership literally aims to help leverage the lessons that we learned from COVID so we can better be prepared for another mass outbreak if it happens way in the future. So overall, I would say this is a win for the CDC as well as Palantir because this is going to be extremely beneficial not only for these types of organizations, but also for the general health of the public at large. The head of public health even commented about this partnership, and he says, and I quote, "Palantir is extremely proud to continue its partnership with the CDC, ASPR, and HHS to strengthen America's public health infrastructure through leading-edge preparedness technology." So overall, this is a fantastic contract, and hopefully it gives great PR for Palantir Technologies. The next story we have regarding Palantir is that they announced a partnership with Tampa General Hospital, and this is going to allow Palantir to deploy their various data insights through data analytics to help the hospital perform more efficiently. This is going to help them drive operations, do better research, and have an overall better clinical excellence so they can take care of their patients more effectively. Tampa General will be utilizing Palantir's Foundry platform as the main core of their overall data analytics. And with Palantir's AI capabilities, this is going to make critical decision-making for the overall hospital much easier. Healthcare systems today continuously generate a load of data in very large volumes, so they need a company like Palantir to help interpret that data so the hospital can run more efficiently. This can also lead to better effectiveness that is going to pour over to their various patients, making the overall experience of the patients better in this hospital. This would include things like Palantir helping the hospital increase and enhance their overall clinical care, as well as the ability to protect a patient's patients' privacy regarding their very sensitive data. Because if you go to a hospital, that hospital carries very personalized data that you don't want to get out, so you want a trusted platform to be able to care for that data as well as interpret it overall without any data leakages. Also, the Vice President and Chief Technology Officer, also known as the CTO, for Tampa General had to say this about Palantir, and he says, "Bringing together our data analytics and operations through Foundry not only enables our team members to see the big picture of how our hospital is currently running, but also predict changes we need to account for, allowing us to optimize every decision we make." So overall, I would say both of these stories are very positive news updates in regards to Palantir Technologies, but at the end of the day, when I look at the share price, I think the share price is trading at too high of a premium considering the current macroeconomic environment that we are in with very negative policies, that right now may not be a good time to buy Palantir, because we should wait for the company's share price to drop lower before we invest it. But again, that's all up to you, and you should always make sure to do your own research. Up next, we have SoFi Technologies, ticker symbol SOFI. And we have a very bullish analyst that I've talked about multiple times that is way too bullish on SoFi Technologies. SoFi Technologies essentially is a digital bank, and they're a very innovative fintech company that currently trades at $4.28 per share, while experts believe this company should be worth at minimum $5 and at maximum $10 per share over the next 12 months. However, this analyst decided to say that this company could literally jump 29x in the next 10 years. So let's actually look at what hard data he is using to calculate this particular price prediction. This article literally highlights that by 2030, SoFi stock could actually rise in price more than 29 times from their current levels. So what makes him so confident that he issued a price target that is so high in a relatively short amount of time? I can't think of any company off the top of my head that could literally 29x in the next decade. So here are his overall financial metrics and projections for 2030. He believes that SoFi Technologies will have 20% market penetration. And I adamantly disagree with him. There is far too much competition in the finance space for SoFi to have or even maintain, or yet alone even reach, a 20% penetration, considering that this company is relatively newer compared to the other more mainstream legacy banks and even more well-known fintech companies. A 20% penetration literally is far too high. We could argue for around a 7 to 10 or maybe a 7 to 12% penetration for the overall market, but not 20%. You're telling me that one company, SoFi, out of hundreds of financial companies, is going to attain 20% penetration? That is just not in the cards. We have other companies like Charles Schwab or JP Morgan, Bank of America, or even Ally Financial that are leagues above SoFi in terms of their overall wealth that they manage. So there's no way that SoFi could compete with those types of companies in the next 10 years. And what's crazy is that most of those companies actually don't even have a 20% market penetration. So to say that a newer company like SoFi is going to achieve a market penetration of 20%, that is misleading investors. And this 20% market penetration actually leads to all of his other numbers being completely fudged, because these are the essential assumptions that he's making to get a 29 times market value from the current share price. And even at the very end, we don't even get a 29 times increase. But let's just take the current share price of $4.28. If we multiply that by 29, we're going to get a $124.12 share price by 2030, according to this article, or maybe by 2032. This would equate to a $116 billion market cap by 2030 or 2032, and that's just not in the cards for this company. Now, you could have my attention if you said in the next 20 or 25 years. That is more realistic. But if SoFi can't even overtake Ally Financial in the short term, which trades for less than $20 billion, there's no way that this company is going to skyrocket by 29 times. Otherwise, all the major hedge funds and smart money would be pouring value and money into this company because it's about to to explode 29 times by 2030 is absolutely unrealistic. Now, I'm not saying that SoFi is a bad company. I own SoFi Technologies. It has less than a 5% allocation in my portfolio. So it's not like I'm trying to rag on this company. I do want the company to do well, but I hate seeing analysts and even financial reporters misleading investors as if this company is going to be the next Tesla and surge in price. It's just not in the cards for this particular company. Now, is this company safer than a lot of other risky growth stocks? Yes, but at the end of the day, it's still a risky growth company. That leads us to our next article, where I would say this particular writer is too bearish, saying that now is not the time to buy SoFi stock, and that potentially SoFi isn't a good buying opportunity. But let's see his evidence for this. He says that recently investors have actually jumped for joy regarding SoFi's share price, as Jerome Powell, who is the chairman of the Federal Reserve, has hinted at a less aggressive interest rate hike for the month of December, because the current negative macroeconomic environment is not favoring companies like SoFi Technologies. After this news came out, the SoFi stock price jumped by around 5%. However, after that, it seems that the stock price ended up pulling back and retraced those gains over the next few days to where now it's even lower than it was originally. The reason for this is that Jerome Powell also said, and I quote, "History cautions strongly against prematurely loosening policy. We have not seen clear progress on slowing inflation," end quote. And this means that they don't plan on stopping the rise in interest rates until inflation gets under control. Now, once we're out of the woods, I would say probably around 2024 to 2025, then companies like SoFi Technologies are going to build their overall price. But until then, it's going to be a very volatile ride. On top of that, on December 2nd, the Labor Department released a more controversial and hotter than anticipated jobs report, which caused the SoFi stock price to fall even lower. So overall, the market is not reacting very positively for these new updates and reports in terms of inflation, increasing interest rates, as well as not very positive job reports. The financial reporter goes on to say, now is not the time to buy SoFi stock. So this is where I'm going to add my opinion, and it's going to be mixed with the overall essence of this article, in the sense of I understand where this author is coming from. The macroeconomic conditions are bad, this is a risky growth company, and you're better off investing into ETFs like VOO, VTI, MTUM, SCHD, and QQQ, among many others. However, he properly highlights that because SoFi's stock price has dropped so much, doesn't this make it a good deal right now? Does it have good value for overall investors? And I would say it does. But he also is taking in the macroeconomic environment, saying maybe this is a good company, but right now might not be the best time to buy into this company. He says that if you have a long-term outlook on this company, which I personally do, you probably should wait a few months before buying into this company and lowering your average cost basis. And I agree with him on that. I think that is a very wise perspective, and it also takes into consideration proper risk management considering the negative macroeconomic environment. Right now probably wouldn't be the time to buy risky singular growth stocks, but it would be the time to invest into blue chip companies, dividend yielding companies, as well as strong ETFs and or index funds like the ones I mentioned earlier. So he's not saying don't buy SoFi Technologies, he's just saying wait and don't buy it right now. Wait a couple weeks or a couple months for the SoFi share price to fall lower, and then you're getting a better deal. So I would love to hear what your thoughts are on Palantir Technologies as well as SoFi Technologies. Go and smash that like button if you haven't already, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.